Well, we weren't going to do any snippets today, and the video started a little late. I didn't have the thing plugged in, but we saw the cross trade up here, so we would have got the 48s. So, if you'll trust me on this, that I would have pulled the trigger at the 48s, would have got filled at the 48s. I wouldn't be surprised if we returned back to test the 48s. But for now, I might as well do a snippet. I wasn't going to trade today. I've been sick for the last several days. So today's the first day that I think I got some sleep for the last 72 hours rest, and I don't have a fever anymore. I have lots of work to do on the snippets from Thursday. Friday we didn't trade. Thursday was the last day that we traded. I think we only made one winning trade. Wednesday was the day we lost. I've concentrated a bit on that. I still don't have any definitive answers. I don't want to. Well, I'll discuss that in the snippets. For now, though, we're going to follow everything that we've been following for January, and we're going to use the analyzer to separate month to month. So if we implement any new stop strategies, trailing stop strategies, any other positioning strategies, we can follow for a month and then compare and analyze the results through comparison. So that's something that we thought about implementing. We're going to do that. I have some different ideas there, so I'm not over leveraged when I find myself in those sharp short covering rallies. Interestingly, all of the people that I've spoke with and have spoken about that short covering rally on the 23rd said that that was just a treacherous short covering rally. So I don't feel so bad, although I did lose $2,000, which was exactly about 4% on two different intervals of our account balance, which was our max. So we did use our stop correctly. The only problem is the mistake I made necessarily wasn't getting stopped out the first time. The second time was a mistake. I shouldn't have been back in the market 2 points higher than when I got stopped out the first time. I did have an opportunity to break even. That was a mistake where I didn't take that advantage, recognizing the short covering rally. There's a couple things I'm going to write about. For now, though, that big cross trade at the 48s allowed us to get short 2, and we already took our profit. We have a 5-point target, and we'll see where it goes. Well, we're still being patient here. I period just opened up, and we're consolidating here in the 40s. Our stop is break even at 48, so we're going to stand tight. Well, they almost took us out of 48, but they didn't. Considering all of this cross trade, if they did take us out at 1348, then we certainly would have been interested in getting back in. Of course, we wouldn't have got in at 48. We would have had to get back in at a lower price, probably somewhere in the low 47s. That's one thing I'm going to address in February. I've noticed through an analysis of January's results that we do get stopped out on break even a few times. Now, that doesn't necessarily bother me, but when we do get stopped out for break even, it seems that the market then bounces around and breaks for more than 5 points, breaks 15 points, 12 points, 10 points, which we lose a lot of profit or potential anyway. We'd also have to adjust, of course, our target on our second contract from 5 points to maybe 10 points or 8 points or somewhere in between. The alternative is to be more active during the day, which I'm obviously not very active. I only take a few trades, and those are arbitrary when I'm at the desk. I realized that that could be something to work on going forward. Could be an issue of just being more focused. I have a lot going on trying to lay the architecture for the website and produce the snippets and all that, so I'm trying to do as many things as possible at once. That certainly can affect the amount of time that I can sit here at the desk or want to sit here at the desk and do trading. But anyway, those are a couple of things I'd like to address. For now, if we do get stopped out at 48, we will look for a re-entry here in the 47s. The formation so far through the A to I period looks like a short covering formation. We have the stem at AB, C, D, E period, and then the F, G, H, I period is sort of consolidating within that C, D, E area. That could be the case. Globex sold way down to right where the L period broke above January 23rd's B period and J period and K period's high. So that acted as a little bit of support for Globex, and then Globex rallied into the pre-market, and of course from our open end just went up back up to yesterday's volume cluster, which the H period high is of course the 48 change area, all the way up to the 55 area. That's where the volume cluster of January 25th price action is, from I would say about 48.75 to 56.25. It's a nice 7-point span. So if we break over the H period high, that's something you have to be well aware of. You could trade within that cluster, anywhere within that cluster. I wouldn't be looking for any other shorts until all the way up at 56. Of course, you don't want to carry 48s up to 56s. So that's why I have my break-even stop at 48. I'm tempted to move our target way lower than our 43s, but I'm going to keep it at 5 points, since that's what we've been doing for most of the month of January. But I'm tempted to move it all the way down to where the initiative buying occurred, and that's at the 39s. That's well below us. I say the initiative buying occurred, I mean that's within my screen range of 3 or so monitors. The initiative buying since the let's say the G period happened around the 38s. So I wouldn't be surprised that's where we go, but we're still having our target set at 43. Alright, looks like we're headed down toward the 43s. Let's see if we can get this thing to move a point and a quarter lower. Slowly, so I guess we'll pause it and wait. Alright, here we go. Let's see, 42.75. One more tick. I love how the market goes to even numbers and rests. And then after we get filled to 42.75, we're going to pause the video and not do the complete production, and give it another 30 or so minutes. There's the fill. And see if it does go back down to the 38 area that we had talked about. So we're going to pause it. We are filled. We're out of the market. We're flat. Cancel our stop. Take our second target. And we're just going to wait here and see. Even though we are already out of our position, a winning trade, 42.50 was the low enough to fill our 5-point fill, and now we're back up testing the 45.6s. We're about 3 minutes to the next period, which is the J period. That's the afternoon periods. I like to combine J, K, L, and M together for the afternoon session. So we're going to pause the video and see if the J period takes us down toward the 38. I wouldn't be surprised though if the J period opens up and retests that 48 area one last time. So if that's the case, we may just take another trade. So far we were right with the J period opening, trying to retest the 47-48 area. So we're just waiting to see what the results here are in the 47-48 area, if we in fact generate enough volume to get past that huge block of trade. I say huge, I don't mean statistically huge, just a lot of cross trade. 24 to 16, 17 to 6, 13 to 14, 48 to 12, 1300 to 7. Pretty good cross trade. So we'll just pause this and see where we go. Okay, we are just one tick above the H period high, right where the huge cross trade was last time in the H period. We don't see a whole lot of cross trade here. We see 12.98 to 9, 6.50. This is significantly less volume than the H period high. So we're going to go ahead and take a short. We're going to take the 48.50s if we can get them. I don't know. Okay, we're short the 48.50s. All right, there's our 47 tick for a point and a quarter. Our 47.25 target was filled. Now we'll put our 5-point target in at 43.50. Put our stop at break even and let the trade ride. Alright, we just got stopped out for break even. See, that market went to 48.75. That's what we're going to address in February, to see if we can give the market a little more room after we get our first point and a quarter. I'm not sure what the correct ratio is there, but we're gonna take a look at that. Right now we'll wrap the video. We're out of the market.